Okay, hello. So this video will teach you how to quickly explain market failure using a diagram. All right. So, when I said quickly, it means that I'm not going to go through a lot of fundamental details right here. So you might want to go back to your teacher, but this video is going to show you all the necessary steps needed to make your market failure analysis very nicely. Okay. So let's get to it. Okay, so market failure is, everybody knows, is when resources are allocated inefficiently. So what does it mean by that? It means that, in any society, we might have too many of some goods, okay, which is not very good to the society, or we might have too little of some other goods, which is also not so very good for the society. And that's why you always heard about terms like, over allocated, too many of some goods, under allocated, too little for some goods. And that is pretty much, when you see market failure. All right. Okay. Yeah. So when we try to use, a diagram to explain market failure, very important thing that we must know first is how we can see two different perspectives from the diagram. And as you can see on the screen, there are already two perspectives. Okay. If we look at the left, that is what happened in the market. Okay, so I know there are terms, very many names. All right, don't be afraid. Marginal private benefit, marginal private cost. You just treat them like demand and supply. Okay, so these are how people they have made up their decisions about demand and supply. And so at the end they came up with what price they're going to trade and what quantity they're going to have at the end. And if you look at what happened to QM, there's a term for this situation. It's called market equilibrium. So it's just basically saying what actually happened in the market. So if I have to put it quite simply, this is showing you what the reality is. Okay, reality. Okay, all right. But when you look at the diagram on the right, what are we talking about on the right then? Okay, so that would be from the society point of view. All right, what are they really expecting? The society here, okay, it doesn't really exist. Well, it is existing, but then it's not really a real person, okay? It's just, for the love of God, okay? If the society, if we talk about this good, what they really want in terms of, at what price and also at what quantity. Okay, so you can also find, there is also a price for our society and also a quantity for our society. And when you look at the quantity for our society, there is another term. It's called social optimum. So now, if you put the two types of quantities together, things are getting more clear. All right, because, you are able to find that reality, there is one quantity. But then when you look at the society point of view, or I would say this is the ideal, let me use red to, write this word. Or when you look at the society, this is what we are trying to say, ideal, all right? So in the ideal case, when you're comparing what happened to the reality to ideal, you are able to find out, whether or not we are actually doing something according to what the society is expecting. If we are not, if the two quantities, they are not at the same level, then there will be market failure, just like that. Okay, all right? So let's move on, and I'm going to show you with a particular scenario where we can explain everything step by step. Okay, all right? Yeah, let's move on, and I will show you a particular case. But before we talk about this particular case right here, one particular, terminology we must understand is called externalities. So what does it mean by that? Externalities, it's just, it can be something, it's an impact. It can be positive, it can be negative, okay? But this kind of impact would be to the third party, or you would say it is to the society when we are consuming something or when we are producing something, all right, okay? So now, the case that we're gonna talk about, we're gonna use manufactured goods. All right, for this case right here. So for manufactured goods, let's go through this flow bit by bit, okay? We would like to focus on, the firm's perspective from now on, all right? So when we talk about MPC, okay, marginal private cost here, so or just simply supply, all right? There are so many concerns, like how the firms, they would like to supply, their goods. And, the major concern would be the private cost. All right. So what would be the private cost in a case like this? To a factory, right? So it can be like rent, or it can be like wages, or it can be for like materials, etc., etc. All right. So that's simple. Okay. But then what would be the externalities when the firms, they are making the manufactured goods right here? So, if you think about this carefully, if the factory, they are making, like manufactured goods, what would be the impact to other people when they are making the production? It could be something bad sometimes, right? I'm pretty sure you got some ideas. Yeah, there could be like, pollution, yeah, you name it, okay? So anything like, damage to the environment, right? So now let's pause it, all right, and think about it. Which thing or which element do these firms, they care the most? All right, private costs. Do you think the firms, they prefer, or do you think the firms, they would care? Well, for sure. All right, for sure, because that would affect their profits. So for this one here, all right, let me use another color here. Firms care, right? That's for sure. Okay, but what about externalities right here? Do you think the firms normally, when they are, profit driven, they would care? Well, probably not, okay? So probably firms don't care in this case, all right? So if this is the case, then you are able to find out what's gonna happen, all right? Like when you look at the whole thing from the society point of view, all right? So right here, when you look at another element, which is what we call marginal social cost, all right? Yeah, which is from, the society point of view, okay, all right, right here, all right? There's an equation, actually. It's when you use marginal private cost, all right, plus externality right here. So you would be able to find, the cost to the society. What would that be? And from here, look, firms, they do care the private cost, but they don't really care about, the impact to the society, which is the externality. And that is the reason why, if you compare the MSC and MPC, all right, MSC should be bigger than MPC, okay? Because, for the society, for the social cost, we also concern about the impact to other people, instead of just the firms themselves. Okay, so if that is the case, then you are able to find out, all right, this case right here is actually what we call negative production externality. All right, okay, or externalities. All right, so what does it mean right here? It means that when firms, they are making goods, like manufactured goods, all right, they don't care about, externalities like pollution. And so at the end, they just keep producing it, all right, without, considering the cost to the society. All right, so how do we show it on a diagram? On a diagram, all right, you might want to think, if MSC is bigger than MPC, how should we, put the MSC in the diagram on the left? Look, answer is super simple. We just have to put the MSC above MPC. All right, so why do we have to do this? Look, very simple, when you look at it. All right, at any quantity that you're talking about, I'm just gonna, quickly point one quantity or two for you. Or let's say right here, Q1. At Q1, see what happened to MPC and MSC. At Q1, MPC is right here. And then MSC is right there. Okay? above it. So you are able to find out that, or even if I use another quantity, let's say Q2 here. At Q2, MPC is right here and MSC is right here. So which is basically telling you that if that is the case, MSC at any quantity will be bigger than MPC. All right, okay? Because of one particular element which causes this to happen. What is this element which causes MSC is bigger than MPC? Look back to your equation. If there's no externality, then I suppose MSC should be equal to MPC. But right now, there is also an externality when factories, they are producing goods. Okay? And that's why this entire gap right here, all right? Yeah, I think you all know what this is. This entire gap right here, this is pretty much what negative production externality is. Okay, all right, yeah, so there you have it. There you have it, all right, all good? All right, from now on, let's also assume this case here, we only know, something happened to production, all right, so, and therefore when they're making their goods, yeah, we're able to see that there is a negative production externalities, and we don't see anything about, the demand side yet. So let's just assume nothing happened to the demand side, and so, for the MSB, which is, from the society perspective, all right, like here, MSB, the demand for society, it should be the same as what happened in the reality. So now, if we try to, show that, nothing happened to the demand side for the society, then we can simply overlap MSC with MPB here. So now I can say, MSB is just equal to MPB. All right, so here we're able to complete our diagram by now. Okay, so now when you look at the blue curves, we're able to find, the market equilibrium, which is QM here. Oh, let me use another color. Yeah, sorry about that. Okay, we can see QM, which is our market equilibrium. All right, and also if you try to look at, the quantity and also the price for the society, the ideal case, remember, we are also able to find it because, now we can see the red curves as well. And now we just have to find out the intersection for those two red curves, and which is basically right here. Yeah, you see the white dot here. All right, so, let me try to finish the label for you. And so from the intersection right here, we're able to see, the price expected by the society. Let's put P opt here, and also the quantity expected by the society. So now, look, you see, when we are combining two perspectives together, now we are actually able to find the discrepancy. Yeah, are you able to see the discrepancy? Yeah, I'm pretty sure you can, right? So now, let's talk about the discrepancy one by one very quickly, all right? So let's move downwards, okay? When you look at this discrepancy, first of all, you want to look at the quantity, all right? Yeah, quantity. What happened to the quantity right here, all right? We know that, okay, QM is what actually happened in our market, okay, all right? So, but then the society expected to have less, because you can see the quantity expected by the society, Q opt, is on the left. So, it should be with a less amount, all right? So for quantity, all right, we are able to see QM is bigger than Q opt, okay? So, which is already giving us a very simple idea. If that is the case, would you say this manufactured good is over allocated or under allocated? Well, for sure, it is over allocated because, in the reality, we make way more than what the society has expected. Okay, so, here, yeah, that's one thing. Okay, and if you look at the prices as well, comparing the two perspectives, you can also find that P opt is bigger than p.m. All right, so what is going on right here? It means that, the price expected by the society is higher than the price, determined in the market right now, like, what actually happened. So it's basically saying that things are getting too cheap. Well, of course it's going to be cheap. Think about this. If the firms, they only concern about the private cost, all right? If they only concern about the private cost, well, they wouldn't care about the social cost, and that's why they're able to, like make their goods at a lower price, right? But then to the society, they are basically saying, look, if you are making manufactured goods, you must put it at a higher price. Because, if you don't put it at a higher price, then a lot of people, they're going to buy, this stuff. And then, if a lot of people, they're buying it, it's not very good. Because when you are making the goods, what will be created to the society? Pollution. That is the externalities. Yeah, so so that's why, to the society point of view, the price should be higher in order to discourage people, to get more. All right. Unfortunately, that is not, the case. And in the reality, we have a lower price and then a higher quantity. So that's why there is a market failure. All right. Okay. So so that is pretty much what it is. Okay, so if we have to sum up, okay, or if we have to quantify, all right, this market failure, how should we do it? Very simple. Okay, so we would look at the quantity right now. Okay, the quantity right now is QM, which is right here. QM right here. Yeah, and at QM, what is going on in the society? All right. Okay, so let's take a look at this. At QM, let me try to put it here. At QM, all right, you want to look at what happened to the society at that quantity, because that is actually what happened. So what happened to the society? All right, so now how do we look at society? Go back. All right, if you would like to look at the society, we must compare MSC to MSB. All right, so same thing here. If you go back to your diagram right here, you would look at, what happened to MSB and MSC at QM. All right, because that is where, things happen, or that is the quantity that actually happened. All right, so if I use another color to show you what happened at QM. So look at QM. At QM, if I go upwards, where is our, MSC? At QM, our MSC is actually here. See the green dot here? That's my MSC at QM. And where's my MSB? Let me use another color as well. Yeah? MSB should be here. Yeah, because when you look at the curve, all right, this is where MSB is at QM. So, this yellow dot is basically saying MSB at QM. So, if you look at this comparison right here, what is it saying to the society? At QM, MSC is bigger. So right here, we're able to, make one point. MSC is bigger than MSB. All right. So what does it mean? It means that, look, marginal, we all know what that means, additional. It means that, when we are having one additional good, all right, the cost of that one additional good will be higher than the benefit of that additional good. So which means that if we are having one more good in this case, all right, that one more good is going to contribute a net loss to the society. So what does it mean right here? It means that in our society, we should actually have one less good. All right, okay? Right? We all good? Yeah? So, but when we are having a little less good, let's say what will happen. Let's see what will happen, all right? So let's say now we're going to have a little less goods let's say right here, let's talk about, another quantity. Let's call this Q3. All right. What happened at Q3? You can still use the same way to look at it. All right. So where is our, MSC? Go up. Go up right here. This should be the MSC at Q3. Another green dot. Yeah. And you should be able to find the MSB, at Q3 as well. So when you look at the MSB curve, this another yellow dot is where the MSB is at Q3. So you can also see something is off. All right. Well, what is it? Okay. It means about something. If I have to use another, color. All right. Yeah. To show you this, nicely. It means that, okay, if you look back to QM, all right, MSC is way bigger than, MSB, which means that we should have, less goods. And then this extra good is going to create this net loss. This distance of net loss. All right. And if you're using the same logic, even when we are having a lower quantity like Q3, okay, if you're having Q3, that additional good is also creating a net loss to the society, like this many, even though it's not as long as, the one at QM, is still having it. Because, we all know the idea that Q opt should be the quantity expected by the society. But then, when you're beyond Q opt, all these quantities, they would have all kinds of losses. All right. So if you're using the same logic, it means that this entire distance between Q opt and QM, you would find all kinds of losses when we are having more and more and more units of goods, all right, beyond Q opt. So if we try to complete the logic right here, so if the quantity is at here, then the loss will be as much. If the quantity is here, the loss will be as much. And then here, the loss will be as much. And here, the loss in this quantity until you are able to get back to the quantity, Q opt. So with that being said, this purple area will become something very important, all right, to quantify this market failure. So this area is what we call welfare loss. All right, yeah, so that's pretty much how we can explain welfare loss. And now you're able to explain fully, all right, every single element in this diagram, like how come when, a firm, they are making manufactured goods, and when they don't care, so they're going to create, the negative externality. And so at the end, we overproduce some goods, and the losses can be visualized by looking at the welfare loss. All right. Okay. So there you have it. And so to summarize the entire, structure, let's take a look of here, the summary. Okay. All right. So, as long as we remember the steps right here, the 4 steps for every single market failure case that we, should explain, then our essay will be perfect. All right. So have a look at this very quickly. So first of all, identify the type of market failure. All right. And we just did it. What type of market failure it is? Negative production externalities. Right. Yeah. So, and then step 2, explain the cause of the market failure with the diagram. We can explain it. Right. Now we just identify it's negative production externalities. And that's why, why there is negative, production externalities, because people, they don't care, right? They only care about the private cost, but they don't really care about, the social, the externalities. And that's why, the social cost is way bigger than the private cost. And at the end, things happen, okay? Like bad things happen. So that would be step 2. And make sure, you explain this with the diagram. All right. Explain, MSC is bigger than MPC. Why? Because people, they only care about, their own interest. Yeah. Because people, they're ignorant. Yeah. They just want to earn as much profit as possible. And they neglect or the damage to the environment when they are making goods. All right. And if we go to step 3 here, all right, step 3 right here. Once you are able to identify and explain, the negative production externalities, now you should be able to get this diagram done, okay? All right, on the left. When you're able to get this diagram done, and now you are able to explain what happened to the price and quantity comparing the two perspectives. Oh, from the market perspective and a society perspective, what happened to both P and Q? Okay, you can see, Q, from the actual case is actually bigger than what the society expected, and then the price as well. So, and as we explained just now, now you know what to do. And last but not least, okay, you might want to conclude the inefficiency using the welfare loss area. All right, we are able to find out, okay, in this case right here, definitely there is an over allocation of resources in this case, but how do we visualize the loss to the society? And, using MSC and MSB, all right, by comparing them, we are able to find out the area. And that's how we can fully explain, market failure with different steps. All right, hopefully this video helps you how to explain, market failure in your essay, with all these steps here. Okay, if you would like me to explain the other types of market failure as well, let me know in the comment section below. Okay.